Yeah, I'd just like to introduce Tyrone to everybody. Tyrone Shandiman, Strata Insurance Solutions. Tyrone began his insurance career in 2004, working in various roles within the financial services industry. In 2011, Tyrone established an insurance broking practice from his garage, providing a wide-ranging service offering for general insurance. Since then, the business has grown to service over 500 clients with a team of 3 and a strong specialisation in strata insurance. Tyrone's key focus in his business is building long-term relationships by servicing clients in line with the key principles of advice, value, trust and choice. Tyrone manages all operational aspects of Strata Insurance Solutions and is involved in complex and technical matters related to client insurance. In 2016, Tyrone was awarded Queensland's Young Insurance Broker of the Year, which is awarded to insurance brokers below the age of 35 who exhibit an outstanding level of professionalism and integrity. Outside of work, Tyrone has a keen interest for international travel, fitness, music festivals and the stock market. And we'd just like to extend a really big thank you to Tyrone for being such a great supporter of LookUpStrata since almost the beginning. Tyrone has provided content and answered strata insurance questions for our audience since 2015. And we currently have around about 20 articles which he has contributed to on our blog. So thank you very much for joining us, Tyrone, today.
Thank you. Thank you very much.
It's great to have you here. Now we put a call out to our audience for insurance questions and we had a really great response, and I've shared some of those questions with Tyrone. So we're just going to go through those questions to begin with, and then what we will be doing is then also looking at the questions that are submitted by our audience. So Tyrone, we might just start with a Queensland question, and it's from one of our readers who lives in a duplex, and they're asking, in a duplex situation, what are the ramifications when the other party will not contribute to insurance? Is it possible to go it alone with the insurance and only pay for the duplex that you own?
Thanks, Nikki. And thanks for the introduction. I just wanted to also start by saying that I'm always open to anyone contacting me at any time if they want advice about insurance. It's not just for our clients. We give free advice all the time on the phone. So if any of your listeners have any questions outside of this webinar, they can always pick the phone up and give me a call, and I'm happy to assist with their questions. Now, in relation to duplexes, I guess the first thing to establish is, does the duplex have common walls or a common roof? If it has got either of those things, then the building must be insured as one property, and therefore it must fall under a strata title property policy. If you're having issues with the other lot owner contributing to that policy, the first advice I give anyone is to try and resolve it without it being a conflict between yourself and that owner. So have a chat to them. And if you can't talk reason with that owner, then there is availability of the commissioner who can make orders that the owner does pay for their portion of the insurance. If the property doesn't have common walls, you can, and it is a standalone property, your lot is a standalone property, you can insure it separately under home insurance. But the Act does say that the common property, so that could be things like driveways or other areas of common land, must have public liability insurance. So it can sometimes be difficult to get around that specific requirement of sharing a policy, but it does look at specific circumstances. But if your home doesn't have a common wall or roof and is a standalone property, then you can insure it separately. And if it's not, you can't. Yeah.
Okay, thank you very much, Tyrone. I think we have a lot of questions from duplex owners about that type of thing, so I think that will be really helpful. Okay, we might move on to another question now. This one's from New South Wales. A resident has repeatedly requested the committee repair a known trip hazard that hasn't been fixed for years. What are the insurance implications around known hazards that the committee will not address?
Yeah, so with trip hazards, I guess firstly you need to establish, has someone that is qualified given advice to say that this is a trip hazard and the committee has not addressed that specific issue. Now, If that's the case, then when the policy comes due for renewal, you do have to disclose all things relevant to the insurer's decision to insure the property. If the trip hazard has just been identified by an owner, but there isn't a professional saying that it should be remedied, it wouldn't necessarily be an item that would need to be disclosed. But aside from what does and doesn't need to be disclosed to an insurer, if there is a claim and there is evidence by the injured person to show that the body corporate or owner's corporation was advised of the trip hazard and didn't take action, it will increase their culpability at the time of the claim. And of course, what that then has a flow-on impact is that it increases the cost of the claim and impacts your claims history more severely. So the idea is that it's not necessarily just about what you do and don't have to disclose with the insurer. It is risk minimisation is also recommended to assist in reducing your claims history when you are seeking quotes for insurance.
Okay, thank you for that one. And we did have another question that was related to that as well, which was from New South Wales, and that's: a stair carpet is threadbare and uneven in parts, and does this compromise our insurance? So I guess that would fall under the same. Exactly
right. It's the same thing. So committees should take steps to minimise claims, but you don't have to disclose every single potential hazard to the insurer, just the major hazards that you think that they should know when taking the policy out. But you should take action to minimise losses, because less claims, it will definitely help you when you're seeking quotes for insurance.
Excellent. Okay, that's great. Thank you. Okay, we've got one from WA that we've got here, and it's are strata companies that have a strata manager required to have workers' compensation? The strata company has no employees and does not directly employ tradesmen.
Yeah, so that's an interesting question. So I read that question as, was it the strata management company or was it the body corporate? Now, workers' compensation, so for body corporate or the owner's corporation, if you are engaging trades to conduct maintenance on your premises, so that could be like gardeners or any kind of other contractor, it's always recommended you have workers' compensation. The premium is less than $200 or $300. The legislation around contractors is very grey. So our advice to clients is always have workers' compensation if you've got tradespeople doing contracted work on your property. With regard to the strata management company, I actually didn't read the question in that way, but I guess that the legislation for workers' compensation does stipulate what an employee and worker is under the Act. So it would be a case of checking for the strata management company. And I would also just recommend calling Work Cover in Western Australia and getting advice from them as to whether the company does need work cover insurance.
Okay, great. Okay, we might move down to Victoria. We're kind of covering all the states in Australia today. So next one is from Victoria. With renewal of strata insurance, is there a duty of disclosure for all lot owners to advise the insurance company of anything which may have become known which may affect the insurance cover? In which case, should the insurance policy cover with wording be sent to all owners at renewal changeover to a new insurance provider? So I guess you have kind of mentioned that a little bit, but if you'd like to expand on that.
Yeah, no, that's actually a good question. I think that specific point is a very good question. So the policy holder is the body corporate or owner's corporation. So the question that needs to be asked firstly is, does the owner's corporation have knowledge of a matter that should be disclosed to the insurer? Now, that may not be the case if the owner is not saying something to that insurer. It would be hard for an insurer to say that you haven't met your disclosure requirements if you didn't know of the issue in the first place. But the other thing that insurance policies do have, if we're talking about a defect or a property issue, is that there are exclusions around non-rectification of known defects, errors, or property issues. that haven't been addressed by the insured, and that can include the lot owner. So if there is a known issue inside the lot and the owner chooses to not rectify that and there's a claim, then that exclusion could apply. But it really does come down to the owner's corporation's knowledge at the time of claim of disclosure matters.
Okay. All right, so then to New South Wales, do you have, and I thought this was an interesting one, it was something that was a little bit different that we hadn't come across before, which I thought was great. Do you have information on Marina Insurance attached to strata lots?
Yeah, so I did actually look up the Marina Insurance under a few policies after getting that question, because it's one that I actually haven't had before. Yeah, marinas are covered by Strata Insurance, but some insurers will have exclusions around commercial use for marinas. So if they're used for private use and, for example, for storage of private boats, then generally you'll find that under both the property insurance and liability insurance sections of a strata policy, there will be cover for marinas. When they start to become commercial, that is something that really the body corporate should speak to their insurance broker about, because they may need to look at specific marine insurance and speaking to marine insurers about a policy for that marina, separate to your strata insurance. So if it's for personal and private use, then it falls under the strata policy generally. But if it's for commercial use, that's something that the broker should look at and provide a solution for the owner's corporation.
Okay. And again, view it as a special case.
Yes.
Okay, now we might go into, we got quite a few questions from some of our Far North Queensland viewers. We've actually had a few that have come in, but all of them are around the situation in Far North Queensland at the moment with insurance and the cost of insurance in that area. And a few of them are dealing with things like flood cover and storm damage in those areas. So would you like to just, some of them kind of address different aspects of the question, but they're all around the same topic. So would you just like to address the situation up there, Tyrone, at the moment?
Yeah, so at the insurability and cost of insurance in North Queensland has been a major issue for many years. At the moment, the federal government has commissioned the ACCC to do a report on competition in Far North Queensland for insurance. Unfortunately, if you go through the reports, it does actually say that the premiums that insurers are charging are consistent with the claims that they're having. So there really isn't a silver bullet around North Queensland, but except for the federal government intervening in and providing a solution. So the issues at the moment are premiums. So we're seeing increases as much as 30% on already excessive premiums for clients this year. Insurability is now starting to become an issue as well, because prior to last year, Longitude was one of the major insurers for North Queensland available to brokers. They exited from the North Queensland market, and it's really left a few players, one major player, Strata Unit Underwriters, and a few others that have very limited appetite as well. And what we're seeing and the feedback we're getting from insurers is that they're reaching their capacity in North Queensland, and that is that they just cannot write anymore or don't want to expose their business to more risk in North Queensland. So unfortunately, there really isn't a silver bullet at the moment for North Queensland. Each property needs to be looked at on a case-by-case basis. I was recently looking at a building that was previously insured for a premium of around 50 to 60,000. The insurer declined to offer cover this year. The next available option was around $330,000. So it needs to be looked at on an individual basis, but what we are recommending to the government, we've submitted we've made submissions to the ACCC inquiry, is that we think that a government reinsurance pool would actually resolve the issues in North Queensland. And not just for cyclone, but we have other problems with insurance. For example, whenever there's a flood, there's always people that didn't know they had flood insurance. Or when the next storm surge comes, there will be people that say we weren't aware that we didn't have storm surge cover. So if the government were to put in a reinsurance pool for certain events like cyclone, flood, and storm surge and terrorism insurance, with no provision to opt out, everyone paid into that levy, what you would find is that it may help in reducing the costs of insurance in North Queensland, because currently insurance premiums and insurance companies are very risk specific on how they rate. A government-run reinsurance pool would allow it to be spread across all policyholders around Australia, rather than insurers saying, well, people not in North Queensland will charge you a premium of $1,000. People in North Queensland will charge you a premium of $10,000. An insurer might, a government-run levy might, apply a 3 or 5% levy to cover the cyclone risk for all Australians. So.
Okay, and we're not forgetting as well that it's actually impacting people up in Darwin and across the top of Australia as well, and top of Western Australia too, as it's not just far North Queensland. Yeah,
absolutely. And just one other thing, we are writing to all of the federal ministers in North Queensland, and if there are viewers out there that are having issues with insurability and cost of premiums, write to your minister, because for example, Warren Inch, who's up in the Cairns region, whenever we send him a letter, it goes straight to the Prime Minister and Assistant Treasurer of issues. So the more vocal that policyholders are up in Northern Australia, my view is that it may actually force some action of the government.
Okay, that's great. Great information. And you mentioned a figure of 330,000. One of the people that have written into us to ask is saying that we pay well over 320 per annum with very few claims. So it's obviously happening, quite regularly up there with those sums of money.
Correct. Yes.
Okay. So going back over to WA now, we had a question came in. How much should the complex be insured for given the following situation? Should a proper valuation be conducted to determine the risk of damage and the value required to be covered for the risks? The current insurance level essentially equates to the value of each unit times the number of units. Complex comprises co-joined 2-storey townhouses. Complex is a number of separate units in blocks of 4 and 2 units.
Yeah, so when it comes to valuation of, the requirement in all states around Australia is that the property is insured for full rebuild value, okay? The rebuild value can sometimes be more than the sale value of the units. But really, when it comes to valuation of a property, that really falls within the remit of a professional quantity surveyor. So the best way to ensure that you're comfortable with the sum insured is to seek the services of a quantity surveyor to provide a recommendation on the sum insured and ensure for that value to make sure that you comply with the legislation.
And how often should you have that done, Tyrone?
That's a good question. So in Queensland, it's every 5 years, a requirement by law. In other states, there's no requirement by law. In New South Wales, it used to be 5 years, but that was also repealed in the 2015 legislation. Really look at the value of the property. That's a good start. If it's a huge property, with hundreds of lots, you might want to get one every few years, because insurers will automatically index the premium by, say, 5%. And when you're dealing with large sums of money, if it's over-indexed, it might mean that there's a cost benefit in getting a more regular valuation. 5 years is what we would recommend on properties. But if there's no legislation, obviously, then it really is up to the owner, to the committee, to determine if they're comfortable with the valuation, and if they're not, then they should get it revalued. But we've got properties that haven't had a valuation for 10 or 15 years, and the insurers applied a 5% indexation, but the actual cost of rebuilding was only ever increased by 1% over those years. And there's been a major reduction in the sum insured because the valuation has brought back into line with what the CPI or indexation was. So, yep.
So would you look at that when you're doing a renewal for somebody? Would you look at whether you think it would be beneficial for them to get a valuation, or?
Yeah, absolutely. So one of the things we do is we keep all of our valuations on record. But whenever we provide a renewal, our statement of advice specifically talks about valuations and when you should consider them. So from our perspective, whenever a client gets one of our documents, we actually raise that and remind lot owners of their requirements to get valuations, and also, just discuss and talk about, that you should consider evaluation if you're not sure about the sum insured.
Okay, great. All right, so over to New South Wales. Is it true that insurance does not cover any structure that's not compliance with the BCA, or any damage from fire that emanates from that structure? In New South Wales, a block of 8 villa units, the unit next door to me has put a roof on a carport on the boundary with me. They have then put on solar panels and an inverter which overheats. I live in fear of not being properly insured. I understand it's unlawful to put a roof on the boundary unless there is also a firewall. Our strata manager has been no help.
Yeah, absolutely. So I did a bit of research on this. I'm just going to quote one of the most widely used policies that are out there in the market. So insurers do not give advice on whether a building is compliant, right? They will only assess compliance of, building codes at the time of a claim and determine if that meets one of the policy exclusions or not, okay? But insurers there are 3 major exclusions that owners should be aware of. So firstly, insurers do not pay for the cost of replacement, for the cost to rebuild, replace or repair illegal installations. So they don't cover the installation itself. They do not cover damage caused by non-rectification of a property defect, error or omission that you were aware of or should have been reasonably aware of. And they also do not cover the cost of rectifying faulty or defective materials or faulty or defective workmanship, design or specification. All right. So I think that in that there are some exclusions that might apply to that situation. And I really think that, so I guess it comes down to knowledge of the defects. Who is saying that this property isn't defective? Is it a lot owner that may not fully understand the legislation and the building codes, or is there an engineer or a builder that is pointing that out to the body corporate or owners corporation as being defective, a defective structure? But by all means, if the owner doesn't feel that the issue is being addressed, as always, try and resolve the issue with the committee and owners corporation without it being a conflict. There is always the dispute mechanisms available through the Commissioner's office if you don't feel that you're getting satisfactory responses from the owners corporation.
Okay, great. Okay, now to Queensland, and it's an insurance valuation report question. So it's our insurance valuation report has been done on incorrect data in 2017. The wrong number of lots in our scheme is often used in reports, presumably to influence outcomes. Our strata manager has said responsibility would rest with his company, and the committee has refused to get new reports, including insurance valuations, until a future date. Our caretaker with MLR is a large hotel chain, and this year insurance policy was based on their lot listed as vacant. I'm concerned we will be insured if a major problem occurs. We're not QFES compliant. Is there a matter for an investigation, and by who?
Yeah, there's a few issues there, so I'm going to go through each one of them. All right. So the first one that was mentioned was the valuation. There's a question over whether the valuation was correct or not. Definitely, if you feel a valuation is not correct, you should seek to get clarity on that valuation. And most valuers, and particularly good valuers, if their valuation isn't correct, they will obviously take action to correct that. If you find that they've valued it on the wrong number of lots and you go back to them with an inquiry, if they find that it's wrong, they normally will correct the valuation. So the first thing is getting the valuation. The valuation sum may not be incorrect. It might just be that there's a number incorrectly stated on the number of units. But I would firstly suggest seeking clarity from the valuer around whether the valuation is or is not correct. And if the owner is not on the committee, they can write to the committee and ask that they do that. And again, if they don't, there are obviously mechanisms available to that owner if they feel that the committee aren't acting reasonably through a commissioner's office in the worst case scenarios. So the next point, and I've got the questions here, so excuse me if I'm looking over to the...
No, that's fine.
So the next point was around the disclosure of the tenants. So that one of the lots was vacant when it was being disclosed as having the on-site caretaker in the lot. Disclosure of tenants is something that does need to be provided to insurers. Vacant lots, I think that it really depends on the size of the property. So if you've got 2 lots and one is vacant, that's going to have a much bigger impact on the insurance than if you've got a 200 lot building and one of the lots is vacant. So I think that it really does rely on the broker and the committee disclosing the correct occupancies to the insurer, but whether that vacancy does or does not impact the policy or premium, I guess until it's disclosed to the insurer who knows the details of the building, you won't know about that. And again, if the owner is concerned about that, they should put their concerns to the committee, and there are mechanisms if they have further disputes with the committee over whether they've acted reasonably. And lastly, with regard to QFES compliance, so again, one of the things we do find sometimes is who is providing that advice around compliance. If you have specific advice from a qualified professional that says that the property is not compliant in accordance with QFES legislation, then by all means that must be disclosed to the insurer and you should take action. If you don't have that information, then the committee should take steps to find out whether that specific issue is or is not in compliance with the QFES legislation.
Okay, great. Excellent, thank you. So when we're talking about QFES compliance, if a property isn't compliant and an assessor has gone out there and stated that it's not compliant, what impact does that have on the insurance?
Yeah, good question. So if it's not compliant and you knew about the non-compliance and that non-compliance causes a claim, then that could result in the insurer denying a claim or reducing their liability. If it's not compliant and you didn't know about the compliance issue, the insurer can decline it based on, can decline the portion that relates to rectification of faulty workmanship. All right. So, but keep in mind that, when it comes to compliance, one of the common things that we have to pick insurers up on is that they're talking about compliance in 2020 when the building might have been built in 1990. So you always need to look at compliance based on, look at it through the lens of when the building was built, not today's legislation. So.
Okay. So basically, people should be communicating with you all the time. Is that what?
Yeah, absolutely. The main thing is if you've got any specific concerns, the worst thing you can do is sit on your hands and wonder if it's covered by the policy or not. any broker, your broker should, you should have an open communication with your broker about specific issues and get advice around what to do. Defects and compliance issues, they're all very individual in nature. Some of them are more severe than others. Some don't need action. Some need, a very clear path of action. But definitely I would always suggest, if you've got concerns about compliance, pick the phone up and have a chat to your broker about what your options are.
Okay, excellent. Okay, in New South Wales again, we live in a strata complex of 17 townhouses. If there is an exterior light and it's turned off at midnight, and residents or visitors, if they happen to have an accident because it's not lit enough on pathways, is this covered under insurance public liability?
Yeah, so the short answer is yes, but I'll expand on that a little bit further. So you've got two things to consider. The first things is, what are the terms, conditions and exclusions of the policy, right? So the answer to that question is that there is no term, condition or exclusion around lighting in a strata policy. So there wouldn't necessarily be an exclusion that would apply to that claim. The next thing you need to consider is risk management. And this is going back to what I discussed earlier around protecting your claims history. If you think that turning the lights off is creating a hazard, then you should consider whether, from a risk management perspective, looking at the risks versus, the cost benefit, whether it's worth keeping the lights on. So if you have a claim and that's been brought to the committee's attention, that increases your negligence at the time of a claim if someone is injured. So you can't just look at it from, is it covered, but you also need to look at it, what are the implications if we don't address this risk issue, and often it can mean a higher cost of a claim, and also subsequently, a more adverse claims history.
Mm-hmm. And do they take into account the residents in the building? So if you had a building that was the majority of elderly residents that might be more inclined to trip, is that taken into account at all? Or?
So look, when it comes to a legal claim, obviously lawyers will put their arguments forward as to why, how much someone owes and what was did you breach your duty of care and so on. And all of those things are factored into a claim and settlements and how solicitors run their arguments if they are, suing the body corporate. So definitely, it's all, every building is individual in its own nature, and you should consider the, what's appropriate for your specific building.
Mm-hmm. Okay, back to WA. If you have a reserve fund maintenance plan drawn up and it recommends replacement of a roof in the next 5 years, and after 5 years the roof isn't replaced, could an insurance company deny any further claims after the 5-year period in relation to that roof?
Yeah, good question. So it depends on whether the insurer, whether the report states that there's a defect, error or omission with the roof, all right? So maintenance issues may not be a defect, error or omission. So if the roof is found to be defective, and then there is an exclusion around non-rectification of defects, errors or omissions you were aware of. If it's just that the roof should be replaced in 5 years, but there are no defects or issues, then it would be hard for the insurer to take, to apply an exclusion to the policy just because it was a maintenance recommendation as opposed to an actual defect. So I guess the answer to that question is it really depends on what the report says, and the owners corporation should seek advice from their broker around whether whether it should be disclosed to the insurer, or whether they should, what the implications would be of not rectifying that roof.
Okay. New South Wales, one unit operates as Airbnb when the owners are overseas. It is the owner's principal residence otherwise. If an Airbnb patron does damage to the common property, are we covered under our Strata insurance?
Yeah, so the policy covers sudden accidental damage and malicious damage, or accidental damage for that nature isn't excluded by the policy. So damage by tenants, including short-term tenants, is a common claim that we get in Strata Insurance, and we don't get exclusions applied for any specific reason. But notwithstanding that, the insurer does reserve the right to subrogate from the responsible person once they've paid the claim. So at the end of the claim, if the tenant has damaged the property, they will seek to recover the funds or the expenses related to that claim from the tenant.
Okay, and
yeah.
Sorry.
Yeah, Airbnb. Sorry, I was just going to add on that. Airbnb is, one of those topics that does come up often. Look, and we do find, that there are a lot of times that committees try to see if there's a clause in the policy which might assist them with enforcing usage of Airbnb in their complex. The short answer with Airbnb is that in the majority of cases, insurers ought to know in the case of their business that buildings will have tenants that are Airbnb tenants. And also there aren't specific exclusions around Airbnb usage, and insurers don't exclude buildings that have usage of Airbnb. So insurance is insurance isn't the answer to enforcing Airbnb for buildings, but there are obviously other laws and legislation available if the body corporate or owners corporation wants to address that specific issue. Yeah.
And should they because you were mentioning before about if you had vacancies in a building, should they be reporting if there's a large proportion of units that are used for Airbnb?
Yeah, so we always recommend that owners corporations, body corporates, list the percentage roughly around holiday letting. So that is definitely something insurers will require, is percentage of holiday letting. Obviously, you don't know sometimes with Airbnb the number of units that are used for Airbnb basis. But the flip side is that when there's a claim, you can always run the argument that you don't exclude Airbnb usage, so you wouldn't have declined the policy had we disclosed that, right? So the message that I always say is take reasonable care to disclose the usage, including holiday letting. But if you in good faith don't do that, it's very hard for an insurer to apply any penalty to your policy at the time of the claim.
Okay. Okay, we're in New South Wales again, and this is a over 55s independent living strata title retirement village with 104 properties. So they're asking, is there any reason why we need special property insurance due to the fact that we're a retirement village? As property insurance only relates to the property, can standard strata insurance apply rather than being used as a special case and potentially more expensive class group with aged care?
Yeah, so it does depend on insurer to insurer. So, and what the insurer's guidelines are. It can sometimes be more appropriate to insure under a strata policy, but it can sometimes be more appropriate to not. Okay, so with retirement villages, I do know that some strata insurers, don't insure retirement villages. And in that case, it might be more appropriate that the village is placed on a separate property policy with an insurer that does insure retirement villages. So it really looks at individual case by case, whether it's appropriate to insure with strata or separately. But what the broker should be doing is at least canvassing all the strata opportunities with all the strata insurers and also others, and reporting to the committee or the owners corporation. Here are the results of the quotes that we've sought.
Okay, great. And we've had this one come in. I'm not really sure which state it was from, but it's a member of our strata committee leaves the back door open at all times. Does this compromise our insurance?
Yeah, that's a good question. So the short answer is there again. We look at, so going back to what we've mentioned before, is what are the terms, conditions, and exclusions of the policy, and what are things you should do to manage risk and reduce the chance of a claim. So in this case, there isn't a term, condition, exclusion around back doors and leaving them locked or open, but by all means, you should take steps to try and minimise claims and entry by vandals and and other specific claims. So it's not not excluded, but it is something that you should obviously address and try to minimize the chance of a claim happening from the door being open.
Okay, and we've only got a few more, so you're right to go through a couple more questions. Tyrone, almost through the whole list here.
Great questions.
Okay, so from New South Wales, our management charges a considerable fee for arranging insurance. However, it is facilitated through an insurance broker who I guess may also be getting a commission from the insurance company. Is it compulsory to pay the management as per the Strata agreement, or can the insurance commission be excluded from the agreement on renewal?
Yeah, absolutely. So the first thing is always refer to your agreement and what does the terms of the agreement say. It might include that if we don't insure the property through our broker, that you will pay us the commission that we would have earned. Or it might be that the strata manager charges an hourly fee for management of insurance. Now, if it's the latter, obviously, then you need to understand what services does the broker provide? Does the strata manager need to be involved in the insurance? I guess it really does come down to does the body corporate or owners corporation want choice of who they use as well? So by all means, I'm sure that strata managers are open and negotiable to negotiating the terms and conditions of their contracts. And if they're not, then that you might want to decide is there someone else out there that does not have that same condition in their contract.
Okay. We have lots of questions come through about commissions on this side, so I was happy to see that one come up.
Yeah.
And then down in Victoria, when renewal of Strata Insurance comes around, can the OC manager legally respond to the quotes and select the insurance renewal on behalf of the OC without sending any information to the committee? They have only placed a comment in the AGM agenda a few months later that renewal was taken out and the cover events and the dollars charged.
Yeah, that's a good question. So good practice would be for the strata manager to run it by the committee. But if you need to refer to the terms and conditions of your contract, because a lot of strata management contracts does give the strata manager the authority to place and maintain the insurance on behalf of the owners corporation. And that being the case, they're meeting the terms of the contract. Again, that might be a term and condition that you might want to negotiate with the strata manager when the contract comes due for renewal. But it really does depend on what authority the owners corporation or body corporate gives the strata manager in their contract.
Okay, excellent. Well, that's gotten to the end of the questions that we had submitted. I think we've had a few technical issues today and I'm not able to see questions coming in via Facebook. So I do apologise if you've put questions through and we will certainly get back to you with responses. Bear with us on that one. But one thing I thought I would mention, Tyrone, and I noticed we didn't get a question through on it, which I thought was interesting, but did you just want to maybe mention what's happening with the cladding and insurance around Australia? Is that something that you could maybe, address a little bit?
Yeah, absolutely. So look, the cladding issue, I guess it's been something that has obviously come about because of the claims with the lacrosse towers and also Grenfell in London. The good news is that insurers are willing to offer cover for cladding of buildings. Some insurers have preferences for the type of cladding, whether it's horizontal or vertical. But essentially nowadays, there is cover for most buildings with cladding. It's not as hard to get when the Grenfell Tower burnt down and insurers started to panic. But essentially most insurers will just have questionnaires that they get completed. And also, if you're in certain states that require cladding audit reports, they will also ask for those reports. The most important thing is making sure it's actually disclosed to the insurer, because there are some insurers that their guidelines don't allow for cladding. So if you're insured with that insurer and you have a claim, they can say, we wouldn't have insured you had you disclosed this to us. So cladding is becoming less of an issue nowadays because more insurers are comfortable with offering cover. But there are cases where buildings are paying significantly more because they've got a high fire rated cladding product on the exterior of the building. And it is a case of just of taking measures to reduce risk of claims. Some insurers, you can put breakers in between cladding products now, which reduces the chance of fire risk. I think it is looked at on a case by case basis. But the main thing is just make sure you disclose the cladding products that you do have on your building to prevent any issues with insurance.
Okay, great. And I guess it does come down to how much of the proportion of the outside of the building is covered by the cladding as well.
Yeah, absolutely. And the other thing I forgot to mention is that if your building was built in the last 6 years and the product isn't compliant, you might have access to builder's warranty insurance as well. So, but look at all your options, but always chat to your broker about the cladding that is on your building before taking it out of policy. Yep.
Okay, wonderful. Well, thank you so much, Tyrone. It's been a pleasure to run through all of those questions. You were fantastic answering that great big list of Strata insurance questions for our viewers from around Australia. And hopefully we can have you on again in a few months' time to cover the rest of the questions that we received.
Yeah, absolutely. Thanks, Nikki. And again, I'd just like to extend the invitation. If anyone ever has any questions about insurance, you don't have to be a client of ours to get my advice. Feel free to pick the phone up or email me at any time, and I'm happy to share my thoughts and advice to your viewers.
Excellent. Thank you so much, Tyrone. Thanks. You. Bye.